Before we get into it, let's summarize the key events this week. We just went into a state of, basically armed conflict. Not armed conflict, that's not the right word for it, but a state of engagement between the political factions in the US, right? So there's broad disagreement. Basically it's a skirmish on the table. Yeah, the shutdown went into effect Tuesday evening. Prediction markets didn't call it a certainty, and that was, heading into the brink. Maybe there was something. Democrats would pull back, some consensus would be made. But we drove right through the red light. It's the shutdown is on. From here, we have to wait to see who play or how this plays out. Now, from a lay of the land, we talked last week deeply about what was at stake here, right? Um, after the One Big Beautiful Bill Act was passed, ratified, kind of locked in federal government spending plan for the next 10 years. Um, Basically, certain things were line items scratched from the ongoing budget plan, and certain things were prioritized. And each of the kind of call it two main political factions who are fighting for control over this governance institution, the U.S. government. Um, Basically, what we went into now is just I would just call it open negotiation, and we're going to sit here in this state until someone moves off of a position in terms of what they want. So my point here, this we just entered. This is my dog. Apologies. We just entered we just entered a window of heightened risk. This is where the guardrails are off. Certain things can make or break one way or the other. We don't necessarily know how, in the fog of war, these things will play out. So we've entered new territory, in my opinion, and we'll get to that in the U.S. Treasury rates. Before we go into that, we'll go through some predictions, some significance, all of that, kind of mapping our kind of framework for understanding the geopolitical situation, both externally to the United States, but even more important internally. We'll try to dot on all of those throughout our three kind of themes this week. So I want to start by laying the groundwork for the backdrop for World War One. We're not going to go into like a full-on college lecture series on this, but just the basics, and then try to use that analogy on how the situation developed out of what was apparently peace uh, going into the summer of 1914, and within months, the entire world was at war. So we'll start there, and then we'll slowly come to reality today and what we're dealing with at hand, and try to make sense of what is going on and all this craziness that we're experiencing. So let's hop on to the next slide. Yep. So we've got here on the left, this is a map of Europe as it stood at the beginning of World War One. You had countries we're familiar with today: United Kingdom, France, Russia as well. Although Russia went through some major upheaval between World War One and let's say 1989, with the fall of the Soviet Empire. But those three have kind of stood and lived through, like, more or less. The lines look very similar to what you would have seen on a map in 1913, as far as where the lines are drawn today. What's completely different is, the German and Austro-Hungarian Empire. Italy also looks the same. It's marked here as in alignment with the Austro-Hungarian kind of faction in World War One. But the main areas that we've seen kind of broken apart, obviously, as World War One evolved, biggest one is really this German Austro-Hungarian bloc. And so, just to set the stage here, summer of 1914, right? Big event happened. You had the assassination of Archduke Franz Ferdinand. Have him labeled here, his pictures there on the left. who he was, you can think about it. He was essentially a European, royal aristocrat, like these people who have their patents of nobility. They have some dukeship, giving them a kind of noblesse oblige, kind of responsibilities over a certain area of land, people, resources, business, etc. But they're basically the caretaker. It's kind of the inheritor of the feudal model, right? And then Otto von Bismarck, I don't think he was from, noble origins or, airship, that type of thing. He may have been, double check on that. But he's viewed as like one of the most competent technocrats who's ever existed in Western history, right? He was really the architect responsible for unifying all of these German factions into this German empire that shows up on the map. So he was busy putting things together in the kind of mid to late 1800s, but he was gone for decades by the time we're at the summer of 1914. But there's a book by a Harvard historian. She is now deceased. She wrote this, I want to say, in the 1970s. Barbara Tuchman, extremely well respected in her reputation and accounting for history, Western history, in the modern era. But her book, The Guns of August, really, traces the developments that took place in World War One, well after the fact. So she's trying to come in and document the narrative of, hey, what the heck just happened, right? Because in real time, as you're living through this, it feels volatile, right? It's just boom, boom, boom. You're reacting. It's difficult to predict. No one has their heads wired on to understand the story in real time as development drops. We get caught up in the escalatory ladder as, one thing happens, someone responds, maybe they over respond, boom, boom, boom. You get these same way in a stock chart, right? You see a exponential rally turning into like a blow off top. It's very similar to that, the way that history kind of unfolds, these events unfold in real time. So this quote from this Barbara Tuchman book, The Guns of August, really gets at the heart of the matter on how this situation developed and got out of hand, that we now know as World War One, which was just kind of known as one of the saddest, I think, kind of conflict. People died, how gruesome it was, just brutal in terms of industrial warfare, um, lives lost, populations disrupted, value destroyed, all of the above. Just a complete catastrophe. Um, but anyway, Bismarck went on record. This is kind of the textbook prediction from a statesman predicting future events that would unfold, in the scope of these big systems beyond one individual's lifetimes. But he went on record sometime in the late 1800s and said this whole thing, the next kind of great violence would be over some damn foolish thing in the Balkans. He was exactly right, right? And this isn't one of those cases where it's like the broken clock is right twice a day. This person was extremely capable um, and competent at this kind of geopolitical statesman type of role. So Archduke Franz Ferdinand, nobody in America would have heard of him or been aware, would have gotten 0% name recognition, I'm pretty sure. But assassinated in Sarajevo in June 1914. And then things escalated from there. By fall, I want to say, like you had the Germans at war with France, UK is involved. It gets ugly very quickly. So this just sets the backdrop for how things get out of hand. Why am I bringing this up? Well, it's still important to understand all the cast of characters in the nation states, their incentives, how they're interacting with each other. We're literally living through this today. So the European powers, United Kingdom, operating out of the city of London, France, I would call them a secondary power, but like they've consolidated France, Germany, leading the European Union out of Brussels. Um, you've got Russia at play here. So you've got the European regional power versus Russia. And as we've kind of talked about over, each week and our weekly roundup, the other two regional powers, United States, and its kind of a span of control, which it considers to be the Western Hemisphere. And then you've got China, which considers its span of control the South Pacific, Southeast Asia, operating out of Beijing and Shanghai. So that's the backdrop here, how I understand this. And if we're going into something in the future, we've entered the unknown. These steps, like we keep escalating in terms of brinksmanship, but if you try to understand what's going on here, um, I'm going to just kind of attach a lattice to I guess our audience's understanding to really grasp the risk. I think that the risk potential that's embedded in our current state of affairs. And I'm going to make an analogy here, and I don't do this lightly. I really want everybody to be cognizant of what is likely or is possible for the course of events to develop here in the very near term. Like these actions are happening today, and this can lead to an outcome that none of us may desire. So you can't avoid the car crash if you don't take preconditions and preventative measures today is kind of how I would view this and why I'm even raising this point. But to copy paste that analogy, that text from Barbara Tuchman's The Guns of August, put it in today's modern situation. You've seen kind of prognosticators, involved in financial markets is kind of the best area for this, who know the potential for violence in the United States. And I think that's where I want to draw attention to. What we just saw with Charlie Kirk at Orem, Utah, in September 10th. This is the type of thing that can trigger the escalatory ladder and just unleash all of that stored potential energy that's been building up, through conflict, through existing institutional framework, just legacy, systems of rules and governance slowly being eroded and breaking away. This is the exact type of situation, if you look to history, where parties can accidentally climb that escalatory ladder and wind up in a situation that they had no intent to ultimately arrive at. So you can't avoid that outcome if you're not aware of it happening. So maybe it doesn't make sense to get into this too much further than that. But that's kind of the lay of the land, and I am framing things and my own mental construct, trying to make sense and place these events as they develop into geopolitical history as it develops. When you're trying to compare different markets, like it's a very similar analogy. Copy paste is what we're going through right now, like the dot-com bubble. No, it's examples of the thing. It's a fractal, but you look to prior experience to guide and shape your awareness of what may be going on today. So, point I want to get across, this is not Pollyanna, like this is to highlight and call to attention the risk that is embedded in current affairs. And then hopefully this will build awareness so that we can avoid, potentially catastrophic outcomes. So let's get into the next thing, Cameron, what we just saw in Quantico this week. This is, as far as, my cursory research on this, and I'm not a military historian by any means, but this is the first time that this has happened in the history of the United States where the entire senior military leadership, so this was 800 officers, I think it was one-star generals and above across all branches of military, brought to Marine Corps base in Quantico, Virginia. So the story we're being given or presented in the media, the narrative, is that this was to scratch end wokeness, like all of this stuff. No more political correctness. That doesn't foot to reality. Like, would you do something the first time in history to make this about these stupid culture, whatever fights, infighting topics that really have no bearing whatsoever on reality, right? It's red herring, in my opinion. I think what's much more likely in the closed door, there's something much deeper going on, and we should all hope that I'm wrong about this, right? Because the implications are much more serious. But I think that's where we're at in terms of world affairs right now. U.S. interacting with these other key regional powers called the European Center off the continent, UK and Brussels, or London and Brussels, kind of duking it out for who is supreme between themselves, as they have been for 500 years now. Um, you've got Russia, which kind of covers the governance and territorial claim over the northern block of the massive Eurasian landmass, and then you've got China, which covers, well, I'd say the southern block of the massive Eurasian landmass, and into the South Pacific. And then you've got the United States, with which kind of claims and asserts control over its Western Hemisphere, as we've talked about. But there's something much bigger going on under the surface, in my opinion, and that is the risk. That's the dog not barking. That is not yet showing up per se in the awareness of, I think, most market participants. We're getting plenty of signals in price. I think the gold move is a tell. You could call it risk assets, what's going on in the dollar, what's going on in sovereign debt markets across Western economies, and then you'd throw in Japan with that coalition as well. But I think the smoke is all there to suggest that we're at a very risky window. And the fact that we entered this shutdown just said we're that we're live, right? Anything can happen right now. So this is a key thing for how things make or break over the coming weeks and months. I hope I'm wrong about that. So the sovereign debt situation, we're seeing, look to pretty much any G7 country, include Japan. Their long-term interest rates are slowly starting to drift up. It looks like the pressure on yields is upwards. U.S. Is the exemption, or the exception to that case, since the Trump administration has come into the office on January 20th. You've got Treasury Secretary Bissett at the helm of the U.S. Treasury. We've actually seen U.S. Treasury rates buck that trend. So yields have been down with some episodic volatility. So if you go to the chart here, bottom red, let me get the laser pointer. This bottoming in bond prices, or peak in yields, came in January 20th at the beginning of the Trump administration. What we saw in long-term interest rates for U.S. Treasury debt was downward pressure on Treasury yields until we got to Liberation Day. And if you put this in context, right, between Liberation Day on April 2nd and I'd call the end of that window, I mark it where the 20-year auction tailed in May, and yields cyclically peaked for the year, for 2025 year to date. That was what I'd call this open window. Like, conditions were live, rules of engagement, all things are a go with the enemy, right? So between April 2nd, tariffs on, we roll them back, et cetera, et cetera, et cetera. We call it quits once the 20-year auction tails. It was kind of the episode of skirmish. It's been a rip in markets ever since. That same analogy, right? Things go live, Liberation Day to the May 20-year auction. I think when the Fed started cutting at this at the September meeting, we went back to live engagement again. And so to put this in perspective, um, once we went into shutdown, right? You have to think about it from the perception of what is each political party or their leadership who's in control of the political party or the coalition trying to achieve, right? We went through that last week. Now you got to think about what are the means through which they can apply pressure in a negotiation to achieve that outcome. And I think it is very clear that the Achilles heel of the US Treasury right now, we all know the fiscal situation. It's been well documented. US is really in no different of a boat than every other Western democracy in terms of its debt to GDP problem, right? But the US is sharply acute. Debt burden has reached a point where it's as big of a problem as it's ever been at the prior low points in its history. So, American Revolution, Civil War, World War II. The Achilles heel to the executive branch's kind of side in this negotiation is long-term Treasury rates. So, if you look at the chart, since the Fed started cutting, we set in a cyclical high. You've got a bearish engulfing, which means it's a candlestick technical analysis term, but it basically is a signal of downward pressure in terms of candle. Very simple. It's like you look at a prior day candle on an up move, it's green. The size of the candle on the next day is down or red, and it completely engulfs that prior day's high and low. Right. So we saw that on the Fed cut. We also saw it heading into the Treasury shutdown on Monday when it became clear from a market's perspective that this was going to happen. Both of those things, or at least for the short term, suggestive of downward pressure and bond prices, or alternatively, upward pressure on yields. There's some key levels where the Treasury will step in. But same way, like at that same point of pain, the 20-year auction tailed in May 2020. That's when the executive branch had to step off the gas, stop playing offense, and go into retreat. That's where they say, "Oh, we're going to extend tariffs to July, August, etc. We're not going to put in force, this tariff table that we showed across like every country what rate they'd pay at the Rose Garden ceremony." If everybody remembers that. Graphic, famous graphic. We're in that same window right now. So the bond market is your key battleground, the long end rates. Watch this. Right now, the executive branch has the upper hand, in my opinion, to wait this one out. They hold the status quo. Possession's 9/10 of the law, right? So you have Congress, you have the Senate, you have the executive branch. All you have to do is wait this one out. Everything you need had been or every priority that they think they need to accomplish their agenda or what they want to get done was funded in the One Big Beautiful Bill Act. From now on, in terms of the shutdown, it's just ride it out, right? The open attack surface, as it always has been, is the Treasury market and or an uptick of inflation, which is much harder to generate, right? Generate inflation or cause job losses, et cetera, right? That would also put the or just say a softening in the U.S. economy. That would also put the administration on their back foot and have to let go of the gas, give some concessions in to the Democratic leadership. But really, the mark to market of where this battleground is taking place is in your long-term Treasury debt. So for the time being, it looks to me like the risk in markets is really concentrated on long-term rates drifting upwards. But that's in a secular backdrop where the U.S. economy is slowing, demand for borrowing is out of balance. There's a larger suppliers or to be deployed than there is demand for borrowing money from private sector households. So all else equal, this is a primary wave where pressure on interest rates is down, right? For this little window, call it like 1 to 2 years, we're kind of sitting in. For the short term, kind of your secondary wave, the pressure is in the opposite direction. But if you're thinking about it, if you're viewing this from a Democrats versus Republican standpoint, which I try not to view things in, but in this one, the primary wave is in the Trump administration's favor as well. So you'd say tie goes to the White House. You always want the primary trend on your side. This is kind of a Jesse Livermore saying from reminiscences of a stock operator for market practitioners. But just wanted to use this week's roundup to really highlight the risks. Like this is a much riskier situation than I think the rest of that the broad market consensus is aware of at this moment. Equity still hitting all-time highs, all of the above. This may actually be good for risk assets, right? Yields up is actually a positive correlation for Bitcoin and equity markets, the Qs, Mag 7, et cetera, over the last 12 to 18 months window. So rising treasury yields could actually add fuel to this rally in risk assets, as we're seeing from strength in Bitcoin, especially picking up, or it looks like since Saturday of this week, nearing an all-time high again. It's a very volatile window that we're sitting in right now. But one metric you look to, if you zoom out and look at the chart of the MOVE index, which measures implied volatility, expected volatility, or at least where it's priced for options on U.S. Treasury debt, the implied volatility by the MOVE index, it looks like it's drifting. It's at very low levels, but you're starting to see little upticks. And this is where a Bloomberg article I was reading this morning called out. So if you look at moves of the move or vol of vol, right? You did see the sharpest 3-day spike since April. What was April? It was that window where I said the rules of engagement were live, right? Between these parties, these oligarchs, these, elites who are at conflict with one another, both internally and externally amongst each other with these 4 regional powers that I talked about. So you saw implied volatility index start to show rising levels, and we're bouncing off the low. This is still very early. This volatility, associated with this underlying situation may not develop. We may get out of this unscathed, avoid, some broader flare up, both from a market perspective as well as geopolitical engagements. That would be great. That's what I think everybody is hoping for. But I just want to call to attention, this could be the start of an uptick in all of those things. And if you're looking for your early signals, right, you're seeing them across real life with the Charlie Kirk assassination, and then all of the discord that's kind of followed in the social media sphere, in our mainstream media discussion or treatment of this issue. And you're just starting to see signs of it in financial markets. This is not doom and gloom. This is for the positive. Let's avoid the bad outcomes that none of us want. So be aware. That's all I want to do. Attract attention towards. Focus on risk and allocate appropriately, and get out and build things. It's the only way forward towards a bright and better future for everybody.